Welcome to Coffee and Regs.
Hi, everybody. Greg Hotaling here from CSS, and let's talk for a few minutes about options trading in the U.S. So real quickly, our agenda. We'll look at the landscape of options exchanges in the United States, the regulations in the U.S. surrounding position limits on options, and then what the best way to source those position limits is. So I think hopefully this session will be this quick thumbnail sketch of position limits on options in the United States will be helpful to you, position holders on U.S. markets, asset managers, financial institutions that have these positions, and the like. Okay, so to start off, an option, I'm sure most of my viewers here know what they are, but they're basically the right to purchase or to sell underlying shares at a specified price on a future date, right? So you're betting on the price of the underlying shares increasing or decreasing. A lot of growth in options trading over the last few years, and really the phenomenon of options and their popularity is not that old. In 1973 was the first listed option on the Chicago Board Options Exchange, and since then they've grown in popularity. Particularly recently during the pandemic, there's been a lot of talk of retail investors diving into options more than they used to. But I think hopefully this session, this quick thumbnail sketch, like I said, will be helpful to you position holders, regardless of what type of position holder you are, especially for asset managers that want to be concerned about possibly exceeding the position limits, which you don't want to do. And as we'll discuss a little later, there are other things to be concerned about as well, like reporting levels. Okay, so landscape of options exchanges in the US. To me, this is kind of helpful because there are 16 options exchanges. A lot of them have similar symbols and letters, and I tend to get confused. So if you look at it this way, they're really based in a few groups, and that's it, because we've seen a lot of consolidation of exchanges in the world in the last couple of decades, and that has included options exchanges. They've been caught up in all of that. So looking at my quick notes here, I have to remind myself that you have 4 that are now affiliated with the Chicago Board Options Exchange. So that was the first one that I mentioned, started in 1973. And then you have CBOE C2, and you have a couple of others that the CBOE acquired from Kansas-based BATS. And that acquisition was in 2017. So that's CBOE Edge and CBOE BZX. So that's 4 of them. You have another 6 affiliated with NASDAQ. So you have the NASDAQ Options Market, and you have the NASDAQ PHLX and NASDAQ BX. So those latter 2, one way that sort of helps me remember it is PHLX and BX are affiliated with the old Philadelphia Stock Exchange and the old Boston Stock Exchange. And then you have an additional 3 that NASDAQ now own, which were acquired from the International Securities Exchange just a couple of years ago. This was 2016. So that's NASDAQ ISE, NASDAQ GEMX, NASDAQ MRX. Okay, so that's 6 NASDAQ exchanges. So we got 4 CBOE, 6 NASDAQ, 2 NYSE. So NYSE American Options and NYSE ARCA. Of course, the NYSE in 2013, I think it was acquired by ICE. And NYSE American Options and NYSE ARCA themselves underwent some changes before NYSE was acquired by ICE, but those are the 2 affiliated with NYSE that you're going to want to remember. There's kind of a separate straggler, the BOX Exchange, which was formerly a unit of the Boston Stock Exchange, but now is a part of the TMX, right? So they own the Montreal Exchange. So BOX is separate, not really affiliated with any other options exchanges of those 16 I mentioned. And then finally, you have the MIAX, the Miami affiliated options exchanges, and there are 3 of those: MIAX Options, MIAX Emerald, and MIAX Pearl. Their major operations center is in Miami, but from a corporate perspective, their administrative offices are based in Princeton, New Jersey. Not far actually from where I'm now doing this video. Okay, so the next step in our hopefully quick agenda that I'm not going to drone on too long is regulation in the U.S. So how are the position limits on these options that trade on these exchanges set? And there's some related requirements too, like I said, reporting levels, and there are also exercise limits, which I'll get into a little bit later. But these are set by the options exchanges themselves, who are governed and have to get approval from the SEC to do so. But really, before the options exchanges set their limits, it's FINRA, a self-regulatory organization. It's FINRA, which is itself overseen by the SEC. FINRA sets those position limits, or can if they want to. So they decide to set certain position limits for what are known as conventional options or OTC traded options. But for standardized options, the listed ones, FINRA expressly defers to the options exchanges to set those limits. So you have kind of three tiers there. You have the options exchanges that set the limits because they're entitled to do so by FINRA. And of course, both the exchanges and FINRA are overseen by the SEC. So that's how it kind of works from the sort of regulatory ladder, right? That's the perspective. But I think some practical things that you need to be concerned about if you're trading options is what are the requirements for these position limits, not just the levels themselves, but how you have to calculate your holdings, for example. So a lot of that for you legal experts out there is found in FINRA Rule 2630, right? It's a really long rule with a lot of subparts, and in it, they go into, in certain parts of it, they set position limits on conventional or OTC traded options. In other parts, they expressly defer to the exchanges for the limits on listed options, like I said. But importantly, in other parts, they talk about calculation requirements. So for example, limits are on both sides of the market, long and short. You can't hold a long and a short position in equivalent options and net those or have them cancel out. So they'll each contribute towards your holdings for position limit purposes, whether on the long side or on the short side. And if you hold equivalent options in the same economic direction, so for example, a long put and a short call, or a long call and a short put, those are going to be aggregated together for purposes of your options. So you're going to have to add those up for purposes of your limits. Finally, another thing that I think is useful to remember is that, and I just had a question about this from a client here at CSS, and we talked about it, is if you have an option on an underlying product, let's say an index, for example, that also is subject to an option on another exchange outside of the US, that's not one of these 16 options exchanges. Let's say it's listed on Eurex, for example. Do you have to comply with an options exchange set position limit in the US if you didn't acquire that option on the US market, you acquired it on some other market? And the answer generally is no. We've had direct confirmation from one of the big exchanges, the Chicago Board Options Exchange, that they don't view that as being includable. You don't have to include that in your position. But it's always useful to check with the options exchange on which your option is listed to see if that limit will apply not just to the option that's listed on the exchange, but also on an option you may have acquired elsewhere on the same underlying product. So that's how we view that. Probably not includable, but check with the exchange nevertheless. Okay, so those are some things you do have to remember. There are a lot more considerations that I deal with in my day-to-day. Things can get pretty tricky and complicated, but one thing that makes things a lot easier is that sourcing the limits, and this is the next part of the presentation I'll get to, can be made quite simple as far as the limits themselves, the raw numbers, because you don't have to necessarily go to each exchange to get those numbers, even though each exchange with the authority of FINRA does set them. The OCC, the Options Clearing Corporation, which has been around ever since options have been traded in the US, based in Chicago, started in 1973, just like the CBOE, probably not coincidentally. The OCC is a systemically important entity, according to the Dodd-Frank Act. They're considered one of 8 crucial entities for the US economy, most of which are in the category of entities that are basically clearinghouses and derivatives settlement enablers. So the OCC thankfully publishes the position limits on a daily basis in a text file, and you can source that directly from the OCC website. So that's very helpful. A couple of things you should keep in mind when doing that is that the OCC puts its limits on those options, and you've got the ticker symbols for the options right in the list of limits in addition to the limits themselves in certain categories. So the vast majority are equity options, but some of them are also in a category called index or other. And those are largely index options and cash settled. So why does that matter? That matters because when you're sourcing your position limit levels, the units in which those levels are stated is not the same for the equity options as it is for the index options. Why is that? Well, the index options don't have a physical underlier. They're just cash settled products. You're buying it. You're never going to acquire the underlying physical security. So those limits are stated by the OCC in terms of number of contracts. That's the number you're looking at. That's the position limit you're looking at, is the position limit on the number of contracts. When you're looking at the equity options on the OCC list, you're looking at the number of underlying shares. That's what the position limit is stated in terms of as published by the OCC. So that's something to keep in mind. What else? Let's go over really quickly to kind of wrap up this quick presentation. And it's, probably not nearly enough if you want to be able to comply with position limits for options in all the details you need to, but just trying to do a quick summary here, which hopefully will be helpful. Don't forget aggregation requirements. Accounts, entities under common control that are holding these equivalent options usually are aggregated, but there are very specific rules set forth by FINRA. FINRA also sets forth pretty detailed hedging exemptions, which is a good thing, but those can get pretty nuanced, so look at those as well. As I mentioned, you also have reporting levels. So the reporting levels are pretty low. Generally, for your standard options, it's intermediaries that have to, for the most part, intermediaries that have to report at 200 contracts or greater. And that's due to FINRA by the end of the next business day. So that's a pretty quick turnaround time to make those reports. And, of course, much lower than the position limit levels, which can be 25, 75, 100,000 contracts and, much higher levels. And then lastly, yes, exercise limits. So you have your exercise limits as well. So the general rule there is that for your standard option, your exercise limits are basically that you can't exercise within 5 consecutive business days more than the position limit level. So look at the position limit for whatever option you're interested in or you're holding, and you know that you can't exercise that option for more than that position limit level during a period of 5 consecutive business days. So that's another thing to keep in mind.
This has been another episode of Coffee and Regs.